Hey, what's up, traders? Trader Tim bringing you another Monday market analysis. Today is June 15th, 2015. Last week we were looking at the euro, but we talked about how the ES had a potential for breaking down and how uh, we really wanted to see this long at 2084's hold. And what you have here now is a break of both the long, the 2084 long, and the opposing short, meaning we came down and failed the 61.8 line of the long setup that was below us. So you would think, well, if the long setup failed, now the short should hold. Well, then we traded back up into the short at 2101s and broke through, failing the short setup. Now, we did get some follow through on Friday, and then today breaking down below the long setup again. So what we have here is a break of the long, a break of the short. So we're really in some very cautious sideways consolidation. Now, we did have futures rollover this past week. Therefore, some screwy things can happen as the contracts, as the volume goes from the front month to what was the back month, and the back month becomes the current month. But nonetheless, we should not be breaking a long and a short back to back if we're in a nice trending market. So I'm going to go ahead and get rid of these lines, and I'll get rid of this intraday drawing that I have. And so at this point, we have the potential to come back down here to 2039s. We've broken this swing low from last week today. Here's Monday. The bigger line in the sand is the low at 2057s from back here in the beginning of May, and you can see how all the support we have down here at 2040s, that 2039, 2040 level. At this point, we do have the potential to kind of free fall down here to 2039s. We'll see if we get a reaction above the high of today's candle, as we have formed a little bit of a hammer, almost a dragonfly doji. But at this point, the likelihood of us turning around right here and ripping straight up to 2150s, I mean, the bulls would have to push through this entire consolidation period, and there's a lot of chop within this level, and we're sitting basically on the lower end of this rectangle of consolidation. So there would be you would need a really big push by the bulls to break through in one push. So now, when something like this happens, where we're in summer, so we're between, I guess not officially summer, but we're between Memorial Day and Labor Day. We have a market that is not clearly trending. Now, if we look at just the past month, we can see that the general trend is down. However, we're still within this long of 2039s with a target of 2150s. So we're still, there's still a lot of bullish action in here. But one thing you can do, also being summer, and a lot of people are taking holidays, going on vacation, taking long weekends, and you don't necessarily want to be holding positions and thinking about the markets while you're away from the computer, is take an approach of a smaller time frame using the 512 tick chart only. And so I kind of touched upon this last week with the euro, in highlighting that the euro is starting to look a little bit better, and we're starting to see some better setups on the euro. But if we go to a tick chart, essentially a tick time-based as opposed to tick the NYSE tick, what I've done is I put the 512 tick chart, and then I'm just going to show trading hours only, and I'm going to switch it over to a Heikin-Ashi candlestick. I'm not going to go too much into the Heikin-Ashi at this point. I've got a bunch of stuff on the Heikin-Ashi on the blog if you just search Heikin-Ashi in the search box. But what we're essentially doing is, if you look at the time periods down here, what the 512 tick chart is doing is saying after 512 ticks or prints, then form a new candle. So 512 is a good number for the ES. I've used 233 in the past if the market's really slow, but 512 gives us a good amount of information without, at the same time, filtering out some of the noise. So essentially, what we're looking for is the market to change trend, just as we would on the daily time frame. We're looking for a break of swing highs and swing lows, so only on a very small time frame. So if we start, we'll start, let's say, right about 9 o'clock, or in this case, we'll start from over here at about 8:45. I'm looking for the market to break down between the prior swing low. So up here, if I back up a little bit, you can see, whoops, we are kind of essentially putting in a higher low right here by these lows. And so the market now, this low breaks down below the prior swing low, and so we're just looking for a high to low. We're drawing the same retracement from highs to lows, left to right, but we're just looking for that break of the prior swing low to take a short. And with the 512 tick, you're only looking for anywhere from 1 to 1, maybe 6 ticks to 12 ticks, placing your stop 1 tick outside the 61.8, so rounding up in this case to 50s, and then placing your stop at 75s. And just really, you're just looking to take the first one or the first two in the trend because it's so short, because it's just a short-term trend change. So if we do the same thing over here, we can see that we have a leg down, little rally, another leg down, little rally. This high is lower than this high, signifying that we are in a downtrend. We put in the low, we make a lower high again, and the Heikin-Ashi candlestick makes it really easy to see because the green bar is moving higher, the red bar is moving lower. And so now when we break this swing high, as we did over here, we can pull from lows to highs, place our stop 1 tick, just round up. You don't need to get too crazy in kind of putting your order too high because we're such a small time frame. But placing your order 1 tick in front of the 50, 1 tick below the 61.8, and then just letting the market run up. Typically we'll push through the negative 23. So just using an arbitrary, 1.5 to 1 or even 2 to 1. If you're using a 1-point stop or a 4-tick stop, trying to get 8 ticks out of the deal, and then either trailing or just taking the first 2 in the move and then waiting for the market to reverse again. And again, these are very short-term moves, but you can see here we made the leg up, we started to pull back, but we never broke the prior swing low. So that prevents us from just drawing any arbitrary short up here and getting stopped out. So it's very important to break the swing low or break the previous swing high. So that's really all you're looking for, and you're just looking to take, like I said, maybe 6 ticks to 12 ticks. It's more than scalping, but if you only have a 3 or 4 tick stop, then taking 6 ticks, your reward is still favorable in 2 to 1. You can just kind of go back and look at these again. Just looking at the first couple hours of the morning, I stay away from that first initial 15-20 minutes. Usually waiting the first 30 minutes is just a safe rule of thumb. But in the summer months when we're chopping around, especially like we have here on the daily chart, you can see how we're just not very clear in the trend. I'm not looking to take this daily short because the previous daily short failed. I would want to see this daily short trade cleanly down to its target, and then the next one go down to its target, which would take us down to 2039s, and then look for a break of those shorts and taking a long on the daily chart on the bigger time frame off of that level. So you want to, now that we've kind of broken the trend, we want to see a reestablishment of that trend and the momentum to shift and then gain momentum. So in the meantime, I'm not looking to take any big daily trades right here. I would be looking to take longs around 2039 on a bigger time frame. But in terms of an active day trading methodology, going to be more active in the euro and the 512 tick chart on the ES. So that's all I have for you today. If you do have more questions, feel free to shoot me an email. I've got some more videos, actually a lot of videos, kind of about short-term trading with the 512 in the VIP area. But like I said, feel free, shoot me an email, and I'd be happy to help you out in any way I can. Thanks a lot, and we'll talk to you soon.